All right, well, Michael, we hope you get better soon. We are missing you very much. Elaine particularly is missing you. I know that touches your heart deeply. It actually has nothing to do with any sort of affection for you, though it's not like she hates you or anything, but she got a perfect test and she really wants to put it on the wall of fame. But I won't put it up until you take the test. So anyway, Michael, come back soon. For Elaine's sake. Well, and the rest of us. And your soccer team. Your soccer team misses you too.
Yes.
See, you hear all the girls clamoring for you, Michael. Come back to us.
First time ever.
Maybe this wasn't the best way to start class. Anyway, we miss you, Michael. Page 38, on that note, page 38 in your supplements. And you had 11 problems to do for homework. After this, you're going to be allowed to use your calculator again. So if you have those with you, then have those available after we go over the homework. And good. Oh, you started off so well, and then things just sort of deteriorated. It's Noah's fault, isn't it? Somehow. We'll blame him.
Everything's Noah's.
Make sure you have a paper with the work on it as well. Okay, so have the paper with the work on it as well. If you did it on separate paper, page 38. Quickly. All right, where's the work page? The work page out as well, so you can follow along. The first 6 problems had absolutely nothing to do with finance. The first 6 problems were a review of area. And we went over this at the end of last hour of the last class. We were finding the area of a square with 5-inch sides. Remind me, what's the formula for the area of a square, Ben?
A equals 4 squared.
Well, not 4s, okay, because 4s is perimeter. For the area, Griffin?
S squared.
S squared, side squared, right? So not 4s squared, just side squared. And so if we have a 5-inch side, we plug in 5 inches, and we square that. And then what would we get if we squared 5 inches?
25.
And then square the inches.
Inches.
Squared. There you go, 25 inches squared. And how many had that for the area on number 1? Number 2, we had a parallelogram with a base of 10 feet, a height of 4.7 feet. What's the formula for the area of a parallelogram? Kirsten?
A equals BH.
So we literally just plug in the 10-foot base, we plug in the 4.7-foot height, or altitude you might call it, and if we multiply by a 10 class, all we have to do with the decimal is go, boink, and we just get, Kirsten?
47 feet squared.
Good, and the feet times feet is feet squared. How many had 47 feet squared for number 2? For number 3, we had the area of a trapezoid. That was the long, nasty formula. And speaking of just kidding. Jalen really wants to answer the long, nasty formula. Go ahead, Jalen.
A equals 1/2 h times the quantity of the 1 plus the other.
There we go. So the first thing we want to do is add those 2 bases together. The 9 centimeters, the 12 centimeters. It's in parentheses. That's the first thing we do in order of operations. Class, what's 9 plus 12?
21.
So in the parentheses, we're going to have 21 centimeters. Of course, we also have half the height, which was 8 centimeters. And remember we said the commutative property says you can multiply in any order. I can take half of either one of these. Obviously, though, Jalen, we want to take half of to get 4. And then it really is 4 centimeters times 21 centimeters gave you an answer of?
Centimeters squared.
Centimeters squared. There we go. How many had 84 centimeters squared also on number 3? Good, several of you. Number 4, we had the circle with a diameter of 16 meters. What's the formula for the area of a circle, Corey?
A equals pi r squared.
A equals pi r squared. Now for pi, we use approximately what value, Corey? 3.14. And of course, r stands for what, Corey? The radius. But I didn't give you the radius because I'm a jerk like that. I gave you the diameter. So if Corey, if the diameter is 16 meters, what's the radius? 8 meters. And that's what we need to square. Well, again, order of operations class says we take care of the exponent before we multiply. So we have to square the 8 meters, Corey.
64.
And it's going to be meters squared. And then we have to multiply the 3.14 by the 64. We're going to have to say we have an approximate answer here. Approximately, what was your area on number 4, Corey? Bless you. Guessing we did not do that.
Wait, 20,096.
Don't forget your 2 decimal places.
209.6.
200.96 meters squared.
There we go. Approximately 200.96 meters squared. How many had that answer? How many forgot to cut the 16 in half? And so you got an answer around 800 something maybe. And an answer around 800. All right, questions on this? Let's take a look at the next one. The area of a rectangle. What's that formula, Bryson? A equals LW. And so if the length is 45 yards and the width is 32 yards, we just have to multiply those two numbers together. And what do we end up with for our answer? 1,440. And then yards times yards. Yards squared. There we go. How many had 1,440 yards squared on number 5? Number 6, triangle. With a base of 40 millimeters, 65 millimeters tall. What's the formula for the area of a triangle, Joel? Bless you, 1/2 BH. So we plug in our base of 40 millimeters, plug in our height of 65 millimeters. Of course, Joel, we want to start by cutting which of these numbers in half?
The base.
Good. Take head off hand there. Take half of the 40 to get
20.
20. But really, I just want to multiply 2 times 65. I'm going to hang this 0 here. What's 2 times 65?
130.
130. And of course, we have the extra 0 we hung, so our answer should be 1,300.
Millimeters squared.
There we go. 1,300 millimeters squared. How many had that on number 6? All right, questions on this? Again, you see some of this again on the final exam at the end of the year. It's going to be a while from now, but just want to make sure we didn't completely forget everything we've learned about area. Questions on that at all? All right, so let's take a look at the rest of the problem solving now. And we've been looking in the last couple lessons about something called insurance. And I told you insurance is protection against loss. Some kind of material, financial loss. So you have insurance. It protects you. It gives you peace of mind. Do you use it very often? No. Do you pay for it very often? Yes. Okay, so you pay for it constantly, but you don't really use it very often, but it's there if you need it. And the two types of insurance we've talked about so far are car insurance, which obviously helps to insure your car, and then home insurance, which protects your home or your house, right? And so we said with these insurance thingies, you meet up with an insurance agent at an insurance company, and you sign an agreement, a contract with them that says that if thus and such happens, here's how much you pay, here's how much they pay, and this is what they pay for, and all that stuff. What do we call the agreement between you and the insurance company, Elaine? Not the premium.
Insurance policy.
The policy. It does start with a P. What is it, Elaine?
The insurance policy.
The policy. There we go. The policy is the agreement. Now, she mentioned premium. Do you remember now what the premium is?
Is it like what you pay every month?
There we go. The premium's the payment. So the policy is the paper, and the premium is the payment for the coverage. Not for the paper. So you pay premiums, oftentimes monthly, sometimes once, twice a year, every 6 months you'll pay these premiums. And the insurance company is there ready to help out if you need them. Now, we said that you file something. There was a short little 5-letter word, starts with a C. You file something with your insurance company if there's a problem. It tells them, hey, we have a problem. We need your help. We need you to help pay up. What is that thing you file with the insurance company? Luciana? A claim. You file a claim with the insurance company, and that tells them that you need their help, and then you pay a certain amount, they pay a certain amount. What do we call the certain amount you pay before insurance kicks in and pays something, Joel?
Premiums?
Well, the premium's what you pay every month. That's true. You do technically pay that also. If you didn't pay those, they wouldn't cover anything, right? Your contract, your policy would be null and void. What's that upfront thing you have to pay?
Deductible.
The deductible. Good. What is it, Joel? Deductible. And you pay the deductible to get your stuff fixed, your house, your car, whatever. And then after you've paid the deductible, they'll take care of everything else. There is a good chance if you file a claim, what might the insurance company do to recoup a little of that money they shelled out? What might they do to you, Kirsten?
Higher your premiums?
Raise those premiums, right? Your premiums might go up. Now, in some cases, they may drop you as a customer as well. I've heard of that happening before where you have this insurance company, you file a claim, and after you file the claim, like, yep, we're not going to insure you anymore. You're now a risk, and we don't really want to insure risks. We want to insure people who are safe. And so that's a possibility. Usually they'll just raise your premiums and try to get the money out of you that way to help cover things. Now with car insurance, we said there's 3 types of car insurance. Not 3 companies, right? There's lots of companies, but 3 types of car insurance. One of them you absolutely have to have, required by law. You don't have it, you don't get to drive, or you get in big time trouble if they find out you don't have it anymore. What type of insurance is required by law? The law is your key word there. Elaine?
Liability.
Liability is required by law. And the reason liability is required by law is because liability covers who, Bryson? The other person who gets hit, right? If you get hit, it's not your insurance in most states. It's not your insurance that covers you. It's the bad guy, the one who hits you. Their insurance takes care of you. Again, there are no-fault states, but Georgia and Alabama, where we live, these are not no-fault states. So you get hit, bless you, the other guy's insurance takes care of you. What type of insurance takes care of yourself if you cause the accident? What's that, Joel? Collision. You cause a collision, your collision coverage covers you, helps you to get done. And there's a deductible for that. And then there's another one that you can add on if you want to make sure if somebody like breaks into your car and steals stuff out, that insurance will help to get things fixed back, or a tree falls on it, or a bad hailstorm destroys it, or something like that. Just something weird happens, acts of nature, your car's sitting there in the driveway and a flood comes through and just, ruins the interior and you need to get the inside redone. What is that? Covers a lot of things that are outside the scope of accidents. Comprehensive coverage. Good, the comprehensive coverage. Then we talked about home insurance. And we said home insurance is a lot like the collision insurance. There's an amount you have to pay up front, class. Deductible, and after that, insurance takes care of stuff. And usually the deductible is a little bit higher. And we also said there's a special type of insurance for wind and hail damage. Insurance companies don't want that to be in the same category as like fire or flood or things like that. They want to have a separate wind hail deductible, and so that'll be a little bit separate as well. But the same thing as before, you still sign an agreement, class, called the policy with your insurance company. By the way, you, the customer, are referred to as the policy holder because you hold the policy, right? You're the one who signed the agreement. You make your monthly payments called the premiums, except you don't pay the insurance company. For home insurance, most of the time, who do you generally pay for home insurance? Who does the money actually go to initially, Jalen? The bank. You pay it with your mortgage. So you're paying off the loan, you're paying off the interest. Well, you also pay your insurance premiums to the bank. They set the money aside all year long, and then once a year, when the insurance company is ready for it, they give them the money. Okay, they also collect something else every month from you. It has nothing to do with insurance, but it does have to do with the house. What else does the bank collect with your mortgage payment? Kirsten?
Escrow payment?
Well, that's the next term I was actually going to ask. They collect it in escrow with your premiums.
Property tax.
Your property taxes. They take your property taxes. They set those aside every month for you. So when the government, local, state government, or city government asks for it, they give them the property taxes, and you're good to go. They don't have to worry about something weird happening with their house, because they own the house still technically. Now, once you own the house outright, you live in a house long enough to buy it outright, or you're just really ridiculously rich, well, then you can pay your property taxes directly to the city. And you can pay your premiums directly to the insurance company. But most people in America do not own the homes in which they live outright. They're making mortgage payments. So for most of us, that's how it's going to work. Yes, ma'am? Oh, you wanted to answer the next question. All right, so we said that the mortgage payment, the home insurance premiums and the property taxes, the bank sets them aside in a special separate account called, class, the escrow account. That's the term Kirsten gave us a moment ago. What's it called? The escrow account. And those things just sit there waiting for you to file a claim with the insurance company. Let's look at problem number 7. Read this for us, if you would, Bryson.
Each month, the ordinance pay $197 for their homeowners insurance. They also pay $113 for property tax with this monthly escrow payment.
All right, this is just to review. Escrow is insurance and property taxes. So, $197 every month in insurance, $113 in property taxes every month. What is their escrow payment? What do we have to do to find that, Luciana? Just add the two numbers together. What do we get? $310. Good. We didn't need a calculator for that. How many got $310 for their monthly escrow? Now, number 8, how much do the Nortons pay just for home insurance every year? Corey, what do we need to do for that?
We need to multiply the $197 times 12.
Good. Take the 197 times 12. We're not worried about property taxes in this problem. Just the 197. Multiply that by 12. What did you get for the home insurance premium every year? $2,364. How many had that for number 8? If you didn't have it, write it in now because we're going to need that number in a minute. $2,364. Okay, any questions on how we got those two answers? All right, let's take a look at number 9. Read that for us if you would, Elaine.
After 7 years, lightning struck the Nortons home, and it cost $10,334 for repairs and restoration. It also cost $882 for extended stay lodging for 2 weeks while the repairs were finished. The Nortons policy covered both repairs and lodging after they paid their $1,000 deductible. Did they save by having home insurance for the past 7 years?
All right, so for this, we need to go back just a moment and think. How much from number 8 are the Nortons paying every year? Now, granted, this normally will fluctuate a little bit, but for purposes of the problem, if they're paying $2,364 every year, and they have this for 7 years before the lightning strikes the house, what would I have to do to figure out how much they have paid in premiums? What do I have to do to figure out how much they have paid in premiums, Elaine?
You have to do 2,364 times 7.
There we go. So let's multiply the 2,364 times 7. Hopefully you already did that, but you may or may not have the number written down. Does anyone see what the answer is? And we're not doing this on the calculator yet. Calculator's for after we're done going over the homework. Does anyone have that answer already written down somewhere? Multiply by 7 quickly. Catch your seats. Go. Single digit multiplication should be done quickly. Elaine, you got it? What is it?
$16,548.
They have spent in 7 years $16,548. You can get a decent car for that. They've spent that to protect their home. Every year, spend, 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 spend. Nothing ever happens. They might feel like they're wasting money. And then the lightning strike happens. Well, now the question is, how much does insurance pay on their behalf? Well, how much were the home repairs, class? $10,334. However, does insurance pay all $10,334?
No.
No, because the Nortons have a deductible of how much money, Elaine?
$1,000.
So how much of the $10,334 does the insurance company actually pay out?
$9,334.
$9,334. But in addition to repairing the house after the deductible, the policy also covers lodging while they stay somewhere while the house is being fixed, right? They can't live in their house after it's been struck by lightning. So while the house is getting fixed, they're staying an extended stay. How much did it cost for them to stay there for 2 weeks?
$10,216.
Well, that's the final. That's the final answer I was looking for. But yeah, that's the 882. We're going to add that. And so, what was that number you said the insurance paid total?
$10,216.
All right. So, class, how much have they paid in premiums? $16,548. How much did insurance pay on their behalf?
$10,260.
So, from a purely financial perspective, was it worth it to have home insurance?
No.
No. They lost money, didn't they? They paid the insurance company this much, and insurance only paid them this much. They lost money, didn't they? How much did they lose? Figure out, how much did they lose over a period of 7 years? How much did they lose over a period of 7 years? And Corey, what you got?
$6,332.
Yeah, just subtract $6,332. Now again, what if it had been worse, right? What if the lightning strike had caused more damage, right? Okay, well, then it might have come out even, right? You still have the peace of mind, and again, it's kind of required by the bank because it's their house, assuming that's how it works. Yeah, because it talks about an escrow payment, so they obviously have some kind of mortgage here. Questions on that problem, number 9. Do you see all the stuff that goes into that problem? Questions on 9. Did anyone get that answer correct? You realize they lost over $6,000? Does it make sense now? All right, take a look at number 10. And Jalen, read this one for us.
After the lightning strike, the Norton's home insurance premium went up to $2,520 per year. 4 years later, a hurricane blew a tree onto their house, resulting in major structural damage and water damage from heavy rains. Repairs cost $37,200 and they had to replace $6,200 worth of possessions. They also spent 3 weeks in extended stay lodging, which cost another $1,290. Insurance covered these expenses after a $1,000 deductible for the structural damage and another $1,000 deductible for home furnishings. How much did the Nortons save over the past 4 years?
All right, and by the way, when Mr. McDonald was proofing this, he commented, I think I'd find a different house. Seems like this house is cursed. So anyway, so their premiums go up, right? $2,520 a year, and it says 4 years later. So let's figure out, kind of like we did last problem class, if they're paying $2,520 a year for 4 years, how much are they paying in their premiums? Let's figure out how much they paid in premiums for the past 4 years. What you got, Bryson?
10,080.
Good, $10,080. All right, how many have that same answer there? $10,080 in premiums. Now, let's figure out what insurance paid on their behalf when the tree hit the house. And by the way, the premiums are about to go up again. All right, so anyway, we'll find a new insurance company at this point because they're just going to keep raising your premiums. But let's see what insurance paid. First of all, for the repairs. It says the repairs cost how much, Jalen? Feet down.
The repairs costed $37,200.
But insurance didn't pay all of that. The Nortons had to pay the deductible. So how much did insurance actually pay for repairs?
$36,200.
$36,200. Then there's the furnishings in the home, and the furnishings would have been damaged primarily by the rains. So how much rain-damaged furnishings had to be replaced?
$6,200.
But again, they pay a $1,000 deductible on that also. So insurance only pays, I say only,
$5,200.
and then insurance also pays for them to stay somewhere while the house is being fixed. So that costs insurance another
$1,290.
All right, so we add it all up. Does anyone have that number already written down? How much insurance paid on their behalf? Joel, you've got that?
$37,200.
No. The $37,200 was the total for the repairs. Insurance paid $36,200 of that, right? Because the $1,000 deductible. Insurance paid $5,200 for furnishings, because again, $1,000 deductible. And then insurance also paid $1,290 for them to stay somewhere while the house is being fixed. How much did insurance end up paying for them, Kirsten?
$42,690.
They ended up paying $42,690. Now, class, over the past 4 years, was it worth it to have home insurance? You notice on the first 7 years, it looked at us like, yeah, they would have been better off without it, right? They would have saved $6,000 or so. Well, now over the next 4 years, you look at it like, yeah, that $6,000 they lost in the first 7, way more than made up for here, right? How much did they save over the past 4 years just by having home insurance? So they lost over $6,000 the first 7 years, but how much did they save over the last 4 years? They paid $10,000 to the insurance company. Insurance paid $42,000-ish for them. They saved how much here, Bryson? 32,610. That way more than offsets the loss, right? And so you realize, class, you could go 15, 20, 30 years without ever having an issue. But if you have a big enough issue, it more than makes up for it. It's why you have home insurance. Look at number 11 now. Mr. Russell's happy about this. Number 11, go ahead and read that for us, Joel.
Mr. Russell has paid $117 a month for the past 5 years for home insurance and has never filed a claim.
Filed a claim.
How much has he spent for peace of mind?
He's never had an issue. No reason to ever file a claim with home insurance. How much has he spent on peace of mind? Well, $117 a month for 5 years. Class, how many months are in 5 years? 60 months. So when we multiply by 60, what do we get for our answer to number 11? Ben?
$7,020.
There we go, $7,020. How many had $7,020? And again, right now he'd look at that and say it's all a loss because he's never benefited in any way from his home insurance. But what if? what if, right? What if that, okay? So that's why you get home insurance. Questions on those problems? All right, get your calculators out now. We're going to talk about another type of protection against loss, and that's called life insurance. Life insurance. This is the one we don't like to think about because the only way life insurance does anything for you is if you die. And we'd rather not think about that. But I'll be honest with you, I was in the shower one morning. This is about 10 years ago, maybe 9 years ago. Chloe was just a few months old. My wife was no longer working. She was staying home to take care of Chloe. And I just had this epiphany moment. I'm getting showered, getting ready for the day. And it's like, what if? What if I died? I've got a wife who really can't go to work because she's got a few-month-old. There's a mortgage. There's a car payment. There's a lot my wife would have to take care of. And no way to pay for any of it. She can pay for it now because I'm paying for it. I'm taking care of her. I'm her husband. But if I died, she'd be in a real problem, wouldn't she? And that's when it dawned on me. Probably should have dawned on me sooner than that. Probably should have dawned on me when I first got married, but I need a life insurance policy. I need to make sure that if I die, my wife is provided for. Guys, particularly, as heads of your home, as loving husbands who love your wives the way the Bible says, that needs to be something you take care of when you get married. It's not a bad idea, ladies, for you to have a life insurance policy either. I do have a life insurance policy on my wife because the realization is, heaven forbid, what if something happened to my wife? Who's taking care of my kids? Right, I'm at work. Now, at this point, Andrew's almost school age, and the other three are already in school, but like, childcare costs money. You know, you've got other things that cost. Funerals cost money. There's different things that's like, I would need extra cash to help pay for some of the services I might need while I'm, getting things in order. I also, once we went to kid number 3, it dawned on me, the amount of money my wife would get if I died would have been enough with one kid, but I've got 3 now. Now I'm up to 4. And I was like, we've got college to pay for still. She may have to move to a bigger house, maybe even after I'm deceased. I think I ought to get more money for her. So I raised the level of my insurance policy. These are things that we don't like to think of. I don't like to think about me dying, but I have to realize it's a possibility, right? Obviously, there's an eternal perspective on that as well, isn't there? Right? Making sure that your soul's prepared for eternity, but also life insurance provides peace of mind. I have peace of mind knowing that, heaven forbid, something awful happened to me and I died. At least my wife is taken care of. What if I died a slow death and I ended up having tons of hospital bills over the course of multiple weeks before I finally died? I need to have enough life insurance that my wife can afford to pay all those hospital bills while I was on my way out of this world going to heaven, right? So again, it's not a great topic, but the reason I chose the graphic I did on that page with the little heart is because really life insurance is about loving those you leave behind potentially and making sure that they're provided for. So, a couple of terms we need to know here. First of all, we need to know the policy holder. That's the person who buys the policy. That's the person who has to croak for the life insurance to do anybody any good, okay? Life insurance policy holder is the one who's actually insured. The policy holder never gets the money because there is no money unless that person dies, okay? So policy holder is the one who's covered. The policy holder doesn't get the money. That's different than car insurance. That's different from home insurance. We all see that. The person who gets the money is someone called the beneficiary. Class, say that with me. Beneficiary. Again, beneficiary. That's the person who gets the money when the other person dies. Obviously, my wife is the beneficiary. She gets the money if I were to die. I am her beneficiary. I would get the money if something, heaven forbid, happened to her. Now, there's a couple of things we need to know here. First of all, the coverage amount of the policy. It's also called the face value. That's the amount of money that somebody gets. We call that the coverage amount. Class, what's it called? Coverage amount. Usually it's in increments of $250,000 or increments of $250,000, okay? So it's not uncommon to get a $250,000 policy, $500,000 policy, $1 million policy, $2 million policy, whatever. And that's the coverage amount. That's the amount the person gets, which sounds like a bunch of money unless there's 4 kids to feed, there's a mortgage to pay, there's college to put kids through, and you can't go back to work for a few years. that money can disappear real quick. There's funeral to pay for. There might be hospital bills to pay for. That money can be gone through pretty quickly. So it sounds like a lot, but it's amazing how little it lasts. This is not like generational wealth, right, that you're necessarily leaving. This is just making sure people are cared for. Two major types of life insurance. There's the cheap and the expensive, basically. The cheap stuff is called term life insurance. You see that there? Term life insurance. Notice the last sentence of the first paragraph. Term life insurance is the cheapest form of insurance because the insurance company only pays the coverage amount to the beneficiary if the policyholder dies within a specified term. So what I got is I got a 20-year term policy. If at the end of the 20 years I haven't died, my wife gets nothing. Well, but let's be honest, it's during the, well, at this point the policy is a few years old, but let's be honest, it's during the next 17 or so years that it matters the most, right? I mean, by that point, all the kids should have gone to college, or at least are finishing up college, right? The oldest one could help my wife if something happened to me. So I'm really like, within the next 20, my wife would be working at that point. She could largely help to take care of herself. The mortgage would be paid down. Like, it's really that next 20 years that's the critical years. Now, realistically, in about 15 more years before that policy lapses, I'm going to get another policy just to cover me for maybe the next 10 or something like that. But that's cheap stuff because the company knows, especially at my age, the odds of me dying are really low. Okay? At least in the next 15 to 20 years. Does that make sense? It would be odd if somebody in my age, my health, were to die suddenly, right? Could happen, but it's not likely. So they give me a low rate. I don't smoke, I don't drink, I don't do drugs. All those things, by the way, they find out before they give you your policy, right? They do blood tests to make sure there's not drugs in that blood, alcohol in that blood, you're not a smoker. Why? All those things raise your risk. I'm not a race car driver. That would raise my policies, right? They have higher. I'm not a skydiver. I'm not a pilot. Okay, there are certain jobs, right, that lend themselves toward more expensive policies. I'm a teacher. I stand in front of teenagers at a Christian school. They're not too worried about me suddenly dying, okay? Yes, ma'am.
Would like policemen or
Policemen would have a much higher life insurance premium. It'd be more expensive for them because there's a higher risk to them, yeah. Yes, sir.
What about like athletes?
Athletes are less of a risk of dying. Now, their health insurance might be something else. Though for the professional athletes, they have a players' association that takes care of them. Like they're fine. But athletes have not so much a higher risk of death in most instances as they do risk of injury. So yeah, it would be very, like for instance, what happened with the guy from the Bills a few years ago, right, where he almost died on that football field. And that was really weird. You don't see that every day. It was one of those, what is happening? Whoa. Is this for real? Like, it kind of takes you back because you don't see that every day, even in a violent sport like football, right? So, yeah, I wouldn't say for athletes it would necessarily be higher necessarily. So, term life insurance. Sit up. Term life insurance. You die within these certain years, beneficiary gets something. You don't die in these years and you don't fix the policy or extend it or renew it or something, beneficiary gets nothing. You spend all that money for peace of mind, knowing at least my wife is taken care of if. And I would love to never have to have her cash in that life insurance policy, believe me. I would love that. I would love to just keep living. That would be great. All right, now, there's another type of insurance which you understand is going to cost more, and it's called whole life insurance. Because whole life insurance covers the policy no matter when he dies. And there's something the insurance company is sure of. At some point, you gonna die. So whole life policy covers you your whole life, but since they are guaranteed you're going to die, you pay a lot more. Does that make sense? But it's one payment every month, your whole life, it never changes. You don't have to worry about extending the policy or getting a new policy, and none of that stuff. It's just you know you're covered for a certain amount. Now here's my thought. When I'm 75 years old, do I have the expenses that I have now? No. I've also got retirement money that would be coming. Do I need nearly as much for my wife when I'm 75 years old as I do right now? No. So my thought is I get a bigger policy now while I'm young, and there's a lot more needs if something happened to me. And then as I get older, I can decrease the amount of the coverage as I go. So I'm playing the term life insurance game. I'm paying less every month this way, and gambling that I'm going to be good at making sure I don't let it lapse. And insurance companies are good at making sure you don't let it lapse because they want your premiums, right? So we still have premiums. That's still the amount that you pay every month. Notice there's no deductible. Okay? We're not talking about damages here. It's like, all right, we'll pay $1 million if your husband dies, but you have to pay the first $1,000. And none of that. Okay, here's the $1 million, and of course the government usually taxes that. And anyway, and then you pay for the funeral, you pay for all these other expenses. Anyway, that kind of stuff. Yes, ma'am.
So what would happen if you had, like what you said, like one term policy for 20 years, and you didn't die, so you took another shorter one out? But what if you were in the process of getting the second one, but it wasn't approved, and you died, and the other one had already run out?
So the key is you either go with the same company and do that turnover while there's a year or two left on the policy, or if you go with a new company, you do it while there's a year or two left on the policy. That way, there's no way something weird can happen. Usually, it's a very quick turnaround. Usually, within a week or two, everything's finalized. But you don't wait until it actually lapses to get the new one. And they'll usually warn you within a year or so of the policy expiring, hey, your policy is about to expire, don't forget to renew or extend it, and that kind of thing. Also, you wouldn't actually want to do this, but if the term has expired and you decide to keep making premiums, or keep making payments, they'll actually automatically extend it for you, but your premiums shoot way up after that term's over. It's much better just to get a new policy, usually with a year or two left, but definitely you wouldn't wait till it lapsed. Yeah, that would be unfortunate. That would be pretty much awful, is what that would be. My wife has a friend, again, young lady, our age, we're middle-aged, whatever. Anyway, but by death standards, people would call us young, right? When people our age don't typically die, and the husband died, and he hadn't gotten any life insurance, he hadn't taken care of all these things, and now the wife is just in a terrible way financially. It's awful. Again, it is not loving, guys. If you're going to commit to care for this lady for the rest of your life and love her the way God commands, this is an important element of it. So I know it sounds like I'm pitching for the life insurance companies, but you need to get life insurance, gentlemen, for yourself, so that way if you pass away, your wife is provided for. Yes, sir.
If you're single for the rest of your life.
If you're single, I would say there's not as much of a need. That's a fair question, right? Not everybody gets married, right? That's fair. I will say somebody has to pay for your funeral. And somebody will have other minor expenses. Now, again, if you're single and you don't pay your rent, okay, then the company just, because you died, right? And so you're renting someplace, and the company, place you're renting from just moves all your furniture out to the curb, and they rent it out to somebody else. Okay, they really don't care that much if you don't leave somebody behind who needs that rent payment covered, or even a house payment, a mortgage covered, right? The government's like, hey, we need the property taxes. Oh, he's dead. I guess we don't get it now. So, there is some legal stuff that has to be taken care of. Usually parents are the ones who would have to bear the brunt of that if they're still alive. Next of kin, if you have siblings, they would help to carry the brunt of that. So, it's still, you might argue it's good to still have life insurance, even if you're single and you don't really leave anyone major behind, but you do still have other family who will have some expenses. Even my children, we've got, I think it's a $20,000 or $30,000 life insurance policy on each of the kids. Just enough where if something happened to them, we could at least afford the funeral and take care of some of the legal stuff that is a ramification. Again, I don't like to think about it, but I don't have $20,000 or $30,000 to spend on a funeral. Amazing how expensive those things are, right? And I wouldn't want to, try to take shortcuts. I'd want to make sure that my child, who I love dearly, would have a decent. So it's good to have some insurance coverage anyway, but especially if you're married. But yeah, if you're single, the need for it is not as great, to be fair. All right, let's work quickly through some of these calculators out. Read problem number 1 for us, if you would, Griffin.
Mr. Billings purchased a 20-year term life insurance policy with $250,000 of coverage. He was 25 years old when he purchased the policy. His monthly premium is $15. How much will Mr. Billings pay over the next 20 years if he does not die within that time?
By the way, do you see how cheap term life, and these are realistic numbers, right? You're 25 years old, guys, and you're in good health, you're living, the way God would have you to live. You can get $250,000 coverage for $15 or less in some cases. Ladies, you can get it for around 10 or 12. I mean, they'll cover a lot of money for a little bit of money every month because they don't expect you to die. And so and again, if you get 1 million people around the country paying this, you've got lots of money coming in. You're not shelling out that much. So when something does happen, you've got the money to hand out, right? So that's how it works. They have actuaries who run all the numbers and make sure that they're charging the right amount to make sure that they're not going to take a loss, right? Because we can't afford for the life insurance company to go bankrupt. That would be awful, right? If I died and my wife needs the money, our company just went bankrupt, we actually have nothing to pay you. That would be a problem, okay? So we need them to make money, don't get me wrong. So 20 years, every month he pays $15. What do we need to do to figure out how much he'll spend over the next 20 years on this policy? What do you think, Griffin?
Multiply 15 from the 25 to 20 years. Or
15 times what?
5 to 20 years.
Well, but it's 15 a month.
Well, then, 240 more.
Okay, you were going to. I was just going to say 15 times 12 to get for a year, and then times 20. But you're right, 15 times 240, because there are 240 months in 20 years. So at your seats, multiply that out. I took the 15 times the 12 and then multiplied that by the 20 years. But how much is he spending? It's not that much. You think about it, for over a period of 20 years, all you pay, Griffin, is
$3,600.
$3,600. That's not that much. It's affordable. Term life insurance is. Look at number 2 and read that for us, if you would, Kirsten.
Mr. Johnson purchased the same policy as Mr. Billings, but was 35 years old when he purchased the policy. His monthly premium is $22. How much more will Mr. Johnson pay over the next 20 years than Mr. Billings?
Now, to be fair, I don't think $22 a month is that bad. Like, some people pay more for that for their like, Disney Plus subscription or whatever, right? I mean, like, $22 a month for peace of mind is not that bad. And but he's 35, right? So he's 10 years older, so he pays a little bit more. How much more does he pay over the next 20 years? Not how much does he pay, though you can find that first if you want, but how much more does he pay than the younger Mr. Billings? What you got there, Joel?
$1,680.
Good. He pays $5,280. Oh, that's a good number. $5,280, right, over the next 20 years. But that's $1,680 more than the other guy did. Does that make sense? Okay. Number 3. Back to Mr. Billings now. We just talked about Mr. Johnson, but let's go back to Mr. Billings. Ben, read about Mr. Billings in number 3.
Mr. Billings dies at the age of 38. How much more will his
Beneficiary
receive than he paid into the policy?
All right, now remember, he doesn't pay $3,600, class, right? Because he's dead. He didn't live out the term. He would have had to live to 45. He got it at 25. 20-year term takes him to 45, right? He didn't live out the term. He died at 38. So, how many years does he pay for insurance, class?
18.
13.
Buys it at 25, dies at 38.
18.
Wait, 15.
38 minus 25.
17.
13.
13 years. Okay, 25. Buys insurance policy. 38. Dies. Okay? That is 13 years later.
He gone.
All right, now, 13 years later, and he's paying $15 a month for 12 months. So we see the 15 times the 12, that gives the year, times 13. How much does he pay in premiums? Ben? It's not much.
$2,340.
$2,340 in premiums. And then he dies. His beneficiary is supposed to receive, Ben, how much money upon his death?
$2,340.
No. That would be unfortunate. Beneficiary needs a lot more money than that. That ain't going to get you very far. That might last you a month, if that. How much does the beneficiary get? How much is the coverage amount, then, for that policy? Look back at number 1. What's the coverage amount?
$3,600.
No, I didn't ask you the answer of number one. That's how much you would pay if you never died. Well, at least didn't die within that period of time.
$250,000.
200, that's the coverage amount. The beneficiary, Ben, gets, not that Ben, but the beneficiary, Ben gets $250,000. So the question is, how much does the insurance company lose basically on this deal? How much more does beneficiary get than the premiums were paid into the policy? And again, the insurance company is banking on this happening very rarely. Jalen?
$22,660.
Ooh. No.
Oh,
Elaine, what did you get?
$247,660.
There we go, $247,660 more. That's how much the insurance company loses when Mr. Billings dies. And they realize they may absorb that loss. But again, if you have 1 million customers, let's just say 1 million customers around the country, and let's just say they're all paying $15 a month. That month, you took in $15 million. Can you afford that? Sure. You can afford that as a company. Now, as long as that doesn't happen with all of your customers, if that happened with all of them at once, we'd have a real problem, right? They're hoping for the rapture. A whole lot of paying customers just gone. And they never have to pay for them to die. Anyway, I don't know if they've necessarily thought that part through yet. All right, number 4. Go ahead and read about Ms. Baker. We're going to hurry on here. Luciana, read number 4.
Mrs. Baker purchased a $150,000 whole life insurance policy at the age of 32. She will pay $165 each month for the rest of her life. If she died at the age of 78, how much more will her beneficiary receive than she paid into the policy?
Do you see that? $165 a month. That's expensive. This is why most people don't get whole life policies, because it's just cost prohibitive. But for whatever reason, she felt that was best for her. So $165 a month. She buys it at 32. She dies at 78. Okay, we did really bad with this last time, class. Let's see if we can save ourselves here. How many years of premiums is that, class? 46 years at $165 per month. First of all, let's figure out what are the total premiums that she ends up paying. Let's figure that number first. 46 years, but it's $165 a month. How much total does, bless you, she have to pay for this policy, Corey?
$7,590.
No. This isn't how much she pays a year, Corey. This is every single month she pays this much. And then that's for 46 years. It's a lot of money she pays. Jalen has a aghast expression on her face.
$91,080.
$91,080. Now, what's the coverage amount, class? $150K. So how much does beneficiary get when she dies? Don't make this hard. $150,000, right? The beneficiary gets $150,000. She still did okay on this deal, didn't she? I mean, 78's a ripe old age to be dying. Okay, that's not like you die young or anything. I mean, 78, that's, we'd like to live past that, but that's not necessarily a young age. She spent $91,000. Her beneficiary gets $150,000. So the question is, how much more does beneficiary get than she paid into the policy? What you got here, Joel?
$58,920.
$58,920. That's how much the insurance company loses on that deal. Not nearly as much, but they're guaranteed to have to pay that $150,000. So they're going to charge more. And those are pretty realistic numbers. I looked those up before putting this together. So those are pretty realistic here. So questions on number 4. Questions on whole life insurance. Does that make sense now? Okay, you see why I lean toward term. All right, number 5, interesting here. Again, I'm hoping that you all will choose to live wisely and take care of your body as the temple of God. But number 5, let's read this anyway. Let's have Jalen read it.
If Mrs. Baker were a tobacco user, her monthly premiums would have been $210. What is the percent of increase for a tobacco user?
All right, so her monthly premiums are what, class? No, they're not. They're 165, right? They are 165. But if she used tobacco, she was a smoker, it says her premiums would have been 210. And it says, what's the percent of increase? Class, how do I find percent of increase?
Change your original.
All right, so here's the question. What's the change in the premium if you're a tobacco user? $45. What's the original?
165.
The 165. Divide that. Now remember, top divided by bottom. 45 divided by 165 gives you a decimal. What's that decimal number, Ben?
Point 27 repeating.
0.27777 or 0.2727?
2727.
The 2727. Okay, so this is the nearest tenth of nearest whole percent. So we'll go boink boink, and then what percent of increase is there if you're a tobacco user?
27%.
27%. So obviously, we as Christians, we've got the obligation to take care of our bodies as the temple of God. So we shouldn't be smoking and doing stuff like that. But even the world recognizes it's bad for you, right? 27% increase if you are a tobacco user. So financially, stay with me, financially it would make sense to not be doing that. Let's look at number 6 very quickly before we wrap it up. Mrs. Baker could have purchased $150,000 10-year term policy for $1,350 a month. How much would she have spent on that policy? And if she died at the age of 78, how much would her beneficiary? So go back. Look at number 4. How old was Mrs. Baker when she originally got her whole life policy?
32.
She was 32, okay? And when she was 32 years old, she could have spent how much a month?
165.
No, that's how much she did spend. But if she'd gone term instead, let's just say she's like, too expensive for whole life. I'm going to go with a term policy. How much would she have spent a month? $1,350 a month, and it was for how long of a term? 10-year term. All right. If she lives out that policy, how much does she spend on that policy? $1,350 a month for 10 years. $1,350 a month for 10 years. How much does she spend? What are her premiums over those 10 years? What you got there, Kirsten?
$1,620.
$1,620. How many got $1,620? All right, $1,350 a month. So we have to multiply that by 12 to get how much in a year, and then times 10 because there's 10 years. Now, she dies at 78. Is that included in the term class? No. When did her term expire? When she turned 42, right? That's 10 years later. So does this policy still cover her at 78?
No.
So how much does the beneficiary get if she dies at age 78? 0. They get nothing because she died after the term elapsed. So this first answer, how much money would she have spent on that policy? $1,620. Hey, that's a lot less than this number, isn't it? How much would the beneficiary get? 0. That's a whole lot less than this number too, isn't it? All right, so again, a decision you'll have to make when the time comes, but I want you to kind of see the comparison between term and whole life. Questions on that? All right, homework for this evening. Homework for this evening is to do page 40. Page 40, the homework section, 1 to 25. Now look at it with me real quick. Numbers 1 through 12. Percents, fractions, that's all the way back in chapter 1 in your textbook. So you may want to look over those. Okay, if you've forgotten how to do it, maybe go back to chapter 1 of your textbook. 13 to 20 are terms. There's only 5 actual problems that you're doing, and you may use a calculator for those. All right, have a wonderful rest of your day. You are dismissed.